Hi, and welcome to Lara's Weekly for the training week ending Friday the 6th of April. Lara's Weekly is an end-of-week Elliott wave and technical analysis of oil, gold and the S&P 500, focusing on mid to long-term pictures. This analysis service is designed for investors and for swing traders. This is the last time that Lara's Weekly will be available for free to the general public. In the next week, it will be launched as a subscription service, and I will be offering a once-only awesome grandfather rate to earliest subscribers when I launch it. To make sure that you don't miss out and you get your grandfather rate, to be notified, go to the website and click on the blue Notify Me button on our post and give us your email address, and I'll be emailing everyone on that list later on this week. Let's do oil analysis first. Let's do Elliott wave first and then classic analysis. This is my main Elliott wave count. It's been the wave count I've had for a long time now, expecting that super cycle 1 is over here and super cycle 2 is an incomplete zigzag subdividing 5, 3, 5. If we see cycle B over here, then that's where cycle C begins, unfolding as an impulse, 1, 2, 3, 4, and needing the final fifth wave down to go. There's very, very little room now for primary 4 to move into. If it were to continue any further, it may not move into wave 1 price territory above 74.96. It's finding resistance around about the upper edge of this teal Elliott channel. I've drawn this channel from the start of cycle A to the end of cycle B with a parallel copy on the end of cycle A. And this upper edge is around about where price is finding resistance most of the time, although it's not perfect. It was overshot here, tested for support, and then it moved back through with the power of a third wave. Let's take a look at the structure of, before we go there, one comment about the lack of alternation between primary waves 2 and 4. They are both single zigzags, but primary 4 is more shallow, primary 2 is very, very deep. Alternation is a guideline, not a rule. We mostly see it, but the fact is it's just not always seen, which is exactly why it's a guideline and not a rule. Okay, let's take a quick look at the structure of primary 4, where the end of primary 3 down here. Primary 4 subdivides as a zigzag, 5, triangle for the B wave, 5 wave impulse for wave C. It should be over here because there's very, very little room now to move into it. The strongest piece of analysis on this chart is this Elliott channel drawn from the start of intermediate A to the end of intermediate B with a parallel copy on the end of intermediate A. While price remains within this channel, I will continue to have a bullish alternate wave count, and we may not have strong confidence that we have a high in place. But if we see this trend line fully breached by a full daily candlestick below and not touching the trend line, and preferably with downward movement, not sideways, if that happens, then I will probably discard my bullish wave count, and at that stage I'll have quite a lot of confidence that we have a high in place. So that's how I'll use that trend channel. Let's take a look and see how primary 5 might have begun at the daily chart level, with a high for primary 4. As this point up here, there's an impulse here for minor 1, a very, very deep double zigzag for minor 2, and now a couple of overlapping first and second waves to start off minor wave 3. This indicates some increase in downward momentum should be expected next week as the middle of a low degree third wave unfolds lower. When minute wave 1 is a complete 5 wave structure, then the following bounce for minute 2 may not move beyond the start of 1 above 66.54. The final target for primary 5 remains the same, for it to reach 0.618, the length of primary 3, at 13.39. Let's have a look at the alternate wave count. Again, at the monthly chart level, still seeing a zigzag, but it could be complete, subdividing 5, 3, 5. If we see the B wave within the zigzag over here rather than at this swing high, if it's over at this lower high over here, then now cycle C subdivides nicely as a 5 wave structure. Cycle B is not truncated. Primary C within it isn't truncated. Primary C does move beyond the end of primary A, but it doesn't manage to make a new price extreme beyond the extreme of this 9 wave triangle for primary B. That's okay, that's entirely valid. If we've got super cycle degree second wave zigzag over here, then a super cycle degree third wave should be beginning in its early stages. It must move far enough above the end of one to allow subsequent room for a fourth wave to unfold and remain above first wave price territory. I don't have a target for Supercycle 3 because the data doesn't go far back enough to show where Supercycle 1 began, so I don't know the length of Supercycle 1, so I can't apply a Fibonacci ratio to an expected length for the third wave to calculate a target. Along the way up, a new high by any amount at any time frame above 74.96 would invalidate the first wave count and provide reasonable confidence in the second bullish wave count. Let's look at how Supercycle 3 may be beginning at the weekly chart level, where the beginning here is this point here. We may have a first and second wave at primary degree, a first and second wave at intermediate degree, a third wave at intermediate degree, a fourth wave incomplete for intermediate 4. I wouldn't want to label it over here. It would be over in just 2 weeks compared to many more weeks for intermediate wave 2. And so intermediate 4 should be expected to exhibit alternation quite likely and to be more long lasting so that it's in proportion to intermediate 2. Intermediate 2 was a very deep double zigzag, so intermediate 4 is most likely to be a flat combination or triangle. Intermediate 2 lasted 17 weeks, and so intermediate 4 should be expected to be about even in duration. So far, it's only lasted 10 weeks, so a few more weeks of downwards and sideways movement. It can't move into wave 1 price territory. Intermediate 1 has its price extreme at 55.24. Let's take a look at the daily chart now, how intermediate 4 may be unfolding, where 3 is this point here. It may be a regular flat correction, subdividing 3, 3, 5. So we need a 5-wave structure down from minus C to move beyond the end of A, below 58.13 to avoid a truncation, but to not move below 55.24. The target would see it end in between those 2 points. And so both of my wave counts for the next 1, 2 or 3 weeks are expecting overall downward movement. There's no divergence there, and let's see if there's support from classic technical analysis. And I'm not going to go over this technical analysis monthly chart again because I've done that for the last few weeks in a row and it's exactly the same. I'll only do that when we have a new month to analyse. Suffice to say, at this stage, that overall it looks very bullish. This supports the alternate wave count. But for the short term, we've got support for the idea of more downward movement, which is what both Elliott wave counts expect next week. There's a strong downward day for Friday, and it's got some support from volume, so that looks very bearish. ADX is increasing now, telling us there's a downward trend in the very early stages, so now that's bearish. On balance volume has given some bearish signals here. It's broken below support, found resistance 1, 2, 3 times. I've just been able to draw a new support line now that there's 2 anchor points to draw the support line. Let's watch on balance volume very carefully next week, and we may get a signal early next week. If it breaks below support, this purple support line, that would be a weak bearish signal. The signal would only be weak because the trend line would only have 2 anchor points. It's only just able to be drawn. If it breaks above resistance, that would be a reasonably strong bullish signal because this trend line has been more often tested at least 3 times here. So that has stronger technical significance. RSI is neutral. There is plenty of room for price to rise or fall, as is stochastic, still in neutral territory. Bollinger Band starting to contract slightly now. That's typical behaviour either during a consolidation or sometimes in the early stages of a new trend. And ATR still remains overall flat again. That's typical behaviour from ATR either during a consolidation or sometimes in the early stages of a new trend. Hi, this is Lara with your end of the week video analysis for gold for the trading week ending Friday the 6th of April. For Monday, I'm looking for the bounce to continue to a target at 1338, and after that I'm looking overall for a downward swing to continue to support, which is strong, about 1310 to 1305, and my target is just a little bit above that at 1312. If the target's wrong, it might not be quite low enough. Elliott wave analysis first, classic analysis last this week. My Elliott wave counts, almost all of them, see an A wave at cycle degree over here, and this is where a B wave begins. At the weekly chart level, I've got 5 different wave counts, but I'm only going to publish 2 on a daily basis so that the analysis is manageable for me to do and digestible for people to read and understand, 1 bullish and 1 bearish. This is my preferred wave count at the weekly chart level. It sees cycle B continuing as a single zigzag, subdividing 5, 3, 5. On all of my 5 weekly charts, and I link back to those at the beginning of each text article every day, Elliott Wave Gold members have access to that. On each of these 5 weekly charts, if there's a problem with the wave count, I'm noting it so that members can compare and contrast. This wave count has a problem from this low to this high. It has to see this wave up here as a 5-wave structure, and it must be acknowledged that this movement here looks better as a 3 than it does as a 5 because of the disproportion here between 4 and 2. Primary wave C must be a 5-wave structure for this wave count. It can only be an impulse or an ending diagonal, and all of this overlapping indicates an ending diagonal. This is my preferred way to see the diagonal, an expanding diagonal. Within an ending diagonal, all of the subwaves must be zigzags, and the 4th wave must overlap 1st wave price territory. Rules for diagonals are quite different to rules for impulses. That's why I'm labelling this as a zigzag for 1. There's a zigzag in here for 2. You can see the B wave at the daily chart level, not the weekly. A zigzag up for 3 is longer than 1. A zigzag down for 4 is longer than 2 and overlaps back into 1 price territory. The diagonal is expanding because 3 is longer than 1 and 4 is longer than 2, which means that 5 needs to be longer than 3. It reaches equality length with 3 at 1398.41, and so it needs to end above that point. It must be a zigzag. So far it's subdividing 5, incomplete 3, and then we'll need a 5 up. Minor B within the zigzag can't move beyond the start of A, below 1236.54, but if it were to turn out to be reasonably deep, it should find very, very strong support at the 2-4 trend line. It shouldn't breach that trend line because diagonals, like triangles, normally adhere really well to their trend lines. There's a couple of overshoots here within this diagonal, but prices quickly returned back to within the trend lines, finding resistance and support very, very close to pretty much at these trend lines. Now we come to the problem of what structure is minor wave B. I've got 2 structures at the daily chart level now, where minor A is this point up here. I think this is the most likely possibility for minor B, a double combination. A regular flat correction, labelled minute wave W, is the first complete structure in this possible double. The double is joined by a 3 in the opposite direction labelled X, which subdivides as a zigzag, and now we may have a zigzag unfolding for minute wave Y to complete a double combination for minor wave B. In my experience, one zigzag and one flat are by quite a wide margin the most common 2 structures for a double combination, and double combinations are really common structures. And so when this zigzag for minute Y is complete, it would be very, very likely that minor B should be over there, because double combinations are very, very common, but triples are very, very rare. And so when your second structure in a possible combination is done, that means the probability of the whole correction being over is very, very high indeed. Minute Y needs to subdivide as a zigzag, subdividing 5, 3, 5. And so minuet C needs to be a 5-wave structure. I expect we have 1, 2 to move a bit higher, and then 3, 4, 5 to continue on down. If my target is wrong, it may not be quite low enough. It might not allow quite enough movement for minute wave C to continue lower and complete its 5-wave structure. This is where minute C would reach equality in length with minute A. Minute C, if it moves a bit lower, should find good support at the lower edge of this green Elliott channel. The invalidation point is at the same place as on the weekly chart for the same reason. At the daily chart level, this is another structural option for minor B. It could be a triangle with a double zigzag for A, a single zigzag for B, a single zigzag now needs to complete down for C, and then another zigzag for D, and a final little zigzag for E. C, of both the contracting or barrier triangle type, may not move beyond the end of A, below 1303.08. D for a contracting triangle may not move beyond the end of B above 1356.12. D for a barrier triangle, which is the other possibility here for minor B, should end about the same level as minute b at this price point. As long as the BD trend line remains essentially flat, then an Elliott wave barrier triangle would remain a valid wave count. Unfortunately, that involves an area of subjectivity. D can end slightly above the end of B, above this price point, only when the BD trend line begins to look like it has an upward slope should the idea of a triangle be discarded. Unfortunately, that's subjective, and so this invalidation point is not black and white. That's the only Elliott wave rule which involves any subjectivity. All the rest of them are absolutely black and white. The final little zigzag for E would be most likely to fall short of the AC trend line and may not move beyond the end of C, not even a tiny fraction, wherever C ends up. This wave count would essentially expect choppy, overlapping movement in an ever-decreasing range, probably for a few weeks yet, to complete a triangle for minor B. And when it's done, an upward breakout for minor C. Elliott wave triangles are always continuation patterns, unlike classic triangle patterns in classic technical analysis, which can be reversal patterns sometimes. At the weekly chart level, this is my bearish alternate. This is the most bearish of my 5 wave counts I have for cycle wave B, and so because it's the most immediately bearish, I'm publishing it as an alternate on a daily basis. It's looking now at cycle B possibly as a flat correction subdividing 3, 3, 5. This wave count resolves the problem of how we see this upward movement. Now we're seeing it as a 3-wave structure, and that does have a better look. But now we've reduced the probability by bringing in a very, very rare structure. Intermediate B here subdivides as a triple zigzag. The subdivisions are all perfect, but in my 10 years of Elliott wave analysis, in hindsight, when you can be quite confident of a wave count, I have only ever seen 2 of these before. The rarity of triple zigzags has to reduce this wave count in terms of probability. If this is correct, then this is only the 3rd triple zigzag I've ever seen. For cycle B to be a flat correction, primary B within it must retrace a minimum 90% the length of primary A, so there's a minimum requirement for downward movement at 1079.13. Primary B itself is here seen as a regular flat correction subdividing 3, 3, 5, and now we need a 5-wave structure down for intermediate C. Let's look at how that may be beginning at the daily chart level, where the high for intermediate B is this point here. We could have an impulse for minor 1. We could have an incomplete double combination for minor 2, with a zigzag for minute W, the double joined by a 3 in the opposite direction, and an incomplete triangle possibly for minute Y. However, in my experience for combinations, a zigzag and a flat correction are by far the most common 2 structures in a double combination. To see a triangle within a double combination is reasonably rare. I've seen it a few times, but it really isn't very common. And so that would reduce the probability of this wave count again. It doesn't have a very good probability, but it's totally viable. All subdivisions fit. And it remains entirely possible. If we start to see a downward breakout and downward movement, then this would be my wave count. However, I must also add it does not have good support from classic technical analysis. So it's got Elliott wave problems, and it doesn't have support from classic analysis. If we see a new low below 1236.54, then I would have confidence in this very bearish wave count. At the weekly chart level, let's take a look at some classic analysis for gold for the week. We've got a small real body this week, a longer upper wick, a little bit bearish, the small real body, a spinning top candlestick within a consolidation zone is absolutely normal and should really be expected to see a few of those. Gold remains very strongly range bound with resistance about 1360, 1365, final resistance up at 1375, and a very strong zone of support about 1305 to 1310. Within this smaller consolidation, it's these two upward weeks which have strongest volume, suggesting an upward breakout for gold from here may be more likely than downward. Now, I keep saying that trick does not always work. It actually does work much more often than it fails for gold, but it doesn't always work. There's nothing in Elliott wave or classic technical analysis which is 100% certain. We're dealing with an exercise in probability, not certainty. We've got a weak bullish signal from on-balance volume at the weekly chart this week. This is a weak signal because this trend line was only just able to be drawn. It's only got 2 anchor points. It's got quite a reasonable slope and it's not too long held, so that's actually quite a weak signal. ADX is increasing at the weekly chart time frame, telling us that there's an upward trend at this stage. It's done that before though within this consolidation. If we zoom back, we can see a larger consolidation with an overall upward bias. In order to have really good confidence in ADX telling us there's an upward trend, I really would want to see price break above resistance at 1360, 1365, preferably above 1375 on a day with upward movement that has support from volume, and then I would have good, strong confidence that gold really is in an upward trend when we've got that upward breakout above resistance. So I'm a little bit suspicious of this ADX telling us there's an upward trend at this time frame. ATR is flat, which is pretty common behaviour when markets consolidate. It's been declining and now flat for many months now. This is more normal within some kind of consolidation, and as the Elliott wave count expects, a huge B wave is unfolding. That's absolutely normal behaviour. Very frustrating and difficult trading conditions. Absolutely what you should expect for a B wave. It'll be lovely when it's over. It will end one day. RSI is neutral, there's plenty of room for price to rise or fall, and stochastics back down into neutral territory. So we had price reach resistance here, and then it reached support here, back up to resistance. Stochastics is reaching kind of not even down to the midway mark, and so at the weekly chart time frame, it's not being particularly useful in figuring out when one swing ends and the next begins. What about the daily chart time frame for this little piece of consolidating price action? Here it is, resistance, support, again swinging from resistance to support and back again, not moving in a straight line. Stochastics moving from overbought to oversold, overbought, now moving back to neutral. Price reached up to resistance. Let's now expect overall a downward trend. We should expect it will be choppy and overlapping, because when price is consolidating and swinging from resistance to support and back again, as you can see, it just doesn't do it in a straight line. It's really choppy and overlapping, and sometimes those swings can be very choppy and overlapping like this one here was, and this is no exception. That's what we're expecting. Really difficult trading conditions. We need to see a break above resistance on a day with a support from volume, or below support on a downward day, preferably with support from volume, but for a downward breakout that's not so necessary. Once we have a breakout, then we can expect a new trend is developing for gold. We are not there yet. During this consolidation at the daily chart level, it's also an upward day which has strongest volume. This supports the Elliott wave count, which sees an upward breakout when this consolidation is mature. The Elliott wave analysis still cannot see a completed structure here, so that's been quite useful. I've drawn a small new tentative range here on balance volume. This little support line has only 3 anchor points. The resistance line only has 2 and is now being tested again. That may assist to halt the rise in price, but a breach above resistance here would only be a very weak signal. This is only just able to be drawn, this trend line. This trend line has a little bit more technical significance because it's longer held, but it too only has 2 anchor points. It may offer some resistance if price does continue higher here. A bit of support from volume for upward movement during Friday's session and a bullish long lower wick suggest another upward day for Monday. That supports the Elliott wave count, which expects a little bit more upward movement to 1338. RSI is neutral, room for price to rise or fall. Stochastics returning from overbought now into neutral territory. Let's expect overall a downward swing to support and stochastics to reach oversold. And Bollinger Bands contracting and now holding steady, also really typical behaviour during a consolidation, also typical at the early stage of a new trend. And MACD at this stage bullish, that's a lagging indicator. Hi, this is Lara at Elliott Wave Stock Market with your end of the week video analysis for the S&P 500 for the trading week ending 6th of April. I'm expecting an upward swing to continue next week. The first target now is at 2705. If price gets to that first target and the structure is incomplete, or if it just keeps on rising through it, then the next target is a zone from 2752 to 2766. Elliott Wave analysis first this week, classic analysis last. I'm still expecting a cycle degree fifth wave is incomplete, subdividing as an impulse, 1, 2, and primary 3 incomplete. Primary 3 may only subdivide as an impulse. So far it has 1, 2, 3, and 4 now has just finished its 10th week, and I think the structure is still most likely incomplete. When it's done, I'll expect a fifth wave at intermediate degree to new all-time highs to complete primary 3, and then I'll expect another big multi-week correction for primary 4, and a final fifth wave up for primary 5 to one of these targets. And the second target is now looking more likely. It allows more upward movement for the whole structure of cycle 5 to complete. I have considered other possibilities, looking at intermediate wave 4 over somewhere within here, but no matter how I try and see that, this is the best position for it here. There would be some reasonable Fibonacci ratios, but the problem is if intermediate 4 is over here, it would have lasted only 4 weeks compared to intermediate wave 2 lasting 11 weeks, and intermediate 4 would be very, very shallow, not have moved a great distance in terms of price, nor would it have taken very long in terms of time. The proportions would not look good. That's why I'm going to continue to label this big correction as intermediate wave 4, because so far it looks nicely in proportion to the big correction of intermediate wave 2. This was a relatively deep zigzag and it lasted 11 weeks. So intermediate 4 would most likely exhibit alternation and be a flat combinational triangle, and it may last a Fibonacci 13 or maybe even 21 weeks if it's a triangle, because they do tend to be rather long lasting structures. They're usually more time consuming than single or double zigzags. Intermediate 4 may not move into wave 1 price territory below 2193.81. I'm looking for cycle wave 5, when it's finally complete, to have a pretty good 5-wave look to it, and it's the proportion between second and fourth wave corrections within an impulse which give an impulse what we call the right look. Let's have a look at some structural options for intermediate 4 at the daily chart level, where intermediate 3 was over here. Intermediate 4 at this stage looks most likely to be a regular contracting or regular barrier triangle with a single zigzag for A, a single zigzag for B, a double zigzag complete now for C. This is the most common triangle subwave. To subdivide is a more common multiple. I'm expecting now a zigzag up for D to be an obvious 3-wave structure at the daily chart level. And so although this pullback for minute wave B has come a day earlier than, or a day or two earlier than I had expected, I was warning that we should be seeing a pullback within this upward swing to last 1 or more days and show up at the daily chart level. It's going to give minor wave D an obvious 3-wave look to it at this time frame. If we're looking at a contracting triangle for intermediate 4, which is the most common type, then minor D may not move beyond the end of B above 2801.90. If we're looking at a barrier triangle, which isn't rare but it's less common than a contracting triangle, then D should end about the same level as B. So long as the BD trend line remains essentially flat to the eye, a triangle will remain valid. Unfortunately, that's the only Elliott wave rule which involves any area of subjectivity. D can end slightly above the end of B, above 2801.9. It's only when the BD trend line starts to look like it has an upward slope that we should discard the idea of a triangle for intermediate 4. So this invalidation point here is not black and white, unfortunately. When D is complete, then a final zigzag down for E would be very, very likely to fall short of the AC trend line and may not move beyond the end of C. At this stage, there's not quite enough upward movement for me to move the invalidation point for this idea higher. It's possible that minus C could move lower, but it looks quite unlikely. It's possible, but it's most likely to be over here, so that the AC trend line has a reasonable slope, because for both a contracting and a barrier triangle for Elliott wave, the AC trend line should have a reasonable slope, so it's very likely C is over here. But if it were to continue, it can't move beyond the end of A, below 2532.69. At the daily chart level, this is another idea for intermediate 4. Far too many times in my experience over the years, I've been charting a triangle and expecting that a correction is subdividing as a triangle, and sometimes even expected it may be complete and seen the structure as complete, only then for price to invalidate the triangle, and it's turned out to be a different kind of Elliott wave correction. And usually the different kind is some kind of combination. So I've learned the hard way over the years, when you expect a triangle may be unfolding in a fourth or B wave position, to always have an alternate and always consider a combination. And so here I'm considering a combination for intermediate 4, with the first structure in a double combination a zigzag, labelled minor W, the double joined by a deep 3 in the opposite direction, labelled X, and here we may have a flat or a triangle for minor Y. In my experience over the years, a zigzag and a flat are by far the two most common structures to turn up in a double combination. Triangles and combinations are entirely valid, but not actually that common. So let's expect, if intermediate 4 is a combination, that minor Y now may be a flat correction, subdividing 3, 3, 5. Within a flat, minute B must meet a minimum 90% the length of minute A at this price point. The target would see it do that. Minuet B here itself may be an expanded flat, 3, 3, 5. Minuet C would reach 2.618, the length of minuet A, at 2787. So that's the target for this combination idea. There's another way of labelling a combination. What if X wasn't over here, but it was over here? Then it's possible that intermediate 4 could be a completed double combination. Zigzag, X, expanded flat correction, subdividing 3, 3, 5. But in order now to see minute C as a 5-wave structure, we have to see a truncated 5th wave here for subminuet 5 to end minuet 3. This truncation, it's not very big, but it is a truncation, and so that has reduced the probability of this wave count. Wave counts which avoid truncations will always have a higher probability than wave counts which do have truncations. Now, we could have had a truncation here. I guess you could label this movement too far, too fast, but not really. It just doesn't really look quite like not completely like the situation you'd expect to see a truncation in. It's possible, it's a valid wave count, but it does have a problem, and so I'm noting on the chart that reduces this probability. If intermediate 4 is over here, then intermediate 5 may be underway. I've calculated a target for it two targets at intermediate degree. The first for intermediate 5 to reach 1.618 times the length of intermediate 1. If we get up to the first target and the structure is incomplete or it just keeps on rising, then we'd use the second target for intermediate 5 to reach equality in length with intermediate 3. Within intermediate 5, minor 2 may not move beyond the start of 1, below 2553.80. This is another possible structure for intermediate 4. It could also be a flat correction subdividing 3, 3, 5, with minor B within it, an incomplete flat correction, a regular flat correction, subdividing 3, 3, 5. So this wave count now needs a 5-wave structure upward to complete minute C, and minor B needs to be a minimum 0.9 length of minor A at 2838.85, so that minor B reaches that minimum requirement for a flat correction within the larger structure of intermediate 4. So this wave count would be expecting a 5-wave structure up. If we see a new high reasonably above this point, then the triangle would be invalid and a flat correction for intermediate 4 would look more likely. When minor B is complete and minute c within it is a complete 5-wave structure, then this wave count would expect a big 5-wave structure down from minor wave C to move beyond the end of A to avoid a truncation. This wave count would require quite a substantial breach of the 200-day moving average. Now that's entirely possible. It just has to be judged to be less likely than smaller overshoots or a smaller breach. Until proven otherwise, we should expect support around about the 200-day moving average until that support gives way. Within minute wave C, minuet 2 may not move beyond the start of 1, below 2553.80. This is an alternate idea that looks at the possibility that intermediate 4 could have been a very quick, deep, or not so much deep in terms of intermediate 3, but a quick zigzag that travelled quite a large distance in comparison to intermediate wave 2 in terms of points travelled. At the weekly chart level, if we label intermediate 4 over here, then it still has a reasonable proportion to intermediate 2, even though it would have lasted only a couple of weeks. It's still, because of the distance travelled, still would have a reasonable look in terms of proportion to intermediate 2, and so this wave count is entirely valid. If intermediate 4 is over here, then intermediate 5 should have begun, and it should be a 5-wave structure. So far we may have minor 1 and minor 2, a very deep expanded flat correction, subdividing 3, 3, 5. But again, in order to see this downward wave as a 5-wave structure, we have to see a truncation here. That reduces the probability that this downward wave is complete here as a 5-wave structure, and so this alternate now has a further reduced probability. The target expects minor 3 to exhibit the most common Fibonacci ratio to minor 1 of 1.618. Within it, minute 2 may not move beyond the start of 1, below 2553.80. Okay, let's look at some classic technical analysis now. This week isn't quite a spinning top candlestick. This real body is just a little bit too large really to be considered small, but it does have nearly even upper and lower wicks, and the wicks are quite long, and so overall I'm going to read this as somewhat of a balance between bulls and bears this week, with the bears overall winning because the candlestick is red and it did make lower lows. Prices overshot the 40-week or 200-day moving average quite strongly, but it's managed to close the week above that. That's significant. We should expect price to continue to find support around about this average until support properly gives way and we start to see candlesticks fully below it. There's a slight increase in volume for downward movement this week, but it's still lighter than these prior two downward weeks, and so overall the market is mostly falling of its own weight. That's okay, that can actually be sustained for quite a while. With a little bit of support this week for downward movement compared to upward movement for the prior week, I'm going to read this as slightly bearish. I'm drawing a new range for on-balance volume at the weekly chart level. I'm drawing a support line across these two lows, and now on-balance volume at the weekly chart level is at support. This line does not have strong technical significance because it's only been able to be drawn from these first two lows. So if this is the third test, it's only the third test. However, the line is very close to horizontal, which improves its technical significance, and it's somewhat long held. It's been held for a few weeks now, which also slightly improves its technical significance. If on-balance volume moves up from here, I will read that as a bullish signal and I will give it reasonable weight. In the first instance, it's reasonable to expect on-balance volume to find support here, and so that may assist to halt the fall in price here this week. ADX is slightly increasing, telling us that there may be now a downward trend. The trend would already be extreme because the ADX line is above both directional lines and it's above 35, so the trend would be very extreme. RSI is neutral, there is plenty of room for price to rise or fall, and MACD remains bearish. This is a lagging indicator, it's based on averages, most of these indicators are. What about the short-term picture at the daily chart level? There was some increase in volume for Friday's downward day, but it was lighter than these two prior upward days. And so overall, we may see a test of lows. We may see a little bit more downward movement early next week, but look out for the 200-day moving average to continue to provide around about here, provide support. We've got some overshoots, but it hasn't been breached. These are only overshoots. With volume lighter here than these two prior upward days, for the short term, there's a little bit more support for upward than downward movement. ADX is again slightly increasing at the daily chart level, telling us there's a downward trend at this time frame, which at this time frame is not yet extreme because the ADX line is below 35 and below the negative directional indicator. ATR is increasing. That's really typical behaviour from ATR when the S&P has a big correction in a bull market, when it has a bearish movement. I'm adjusting this trend line slightly on balance volume. It's moved down here. It's been tested twice before, so I'm going to read this as a slight bearish signal. There's a fair distance to go before on balance volume finds support at this little trend line here. This bearish signal from on-balance volume does not mean that price has to continue lower. It certainly could move higher, and on-balance volume could break above resistance. If that happens, that would be a bullish signal. But for now, on-balance volume, on balance, is bearish at this stage, at this time frame. RSI neutral, room for price to rise or fall, as from stochastics. This single bullish divergence from RSI and stochastics, particularly while stochastics was oversold and price was around support at the 200-day moving average, indicates that we should have the end of a downward swing here, and most likely look now for an upward swing to continue until stochastics reaches overbought and price reaches up to resistance about 2815. However, that's contradicted at this stage by ADX telling us we've got a downward trend. MACD still bearish, Bollinger Bands expanding again. That's quite common either when the S&P is in a bear market or in a big bearish move within a bull market. What about inverted VIX in the AD line? No new signals from inverted VIX. On Friday, downward movement from price came with a normal corresponding increase in market volatility, a decline in inverted VIX, but there's no divergence here. Neither is there with the AD line. We did have some mid-term divergence here between price and the AD line. It's been followed by a downward day, so I'm going to consider this divergence here to now have failed. It wasn't followed by any further upward movement. That divergence does still exist though. It may yet be followed by some upward movement. There's no divergence between lows, bullish or bearish either way. That's all from me with your Lara's weekly analysis, and I hope that all of our viewers and members are having a most fabulous weekend.